Hey guys, hope you're having a great day. Your old buddy Tim back with another video. And in this video, we're going to talk about something you've probably heard of on TV and also something that I'm getting a lot of questions about these days given the market and the world economy, and that is this. Hey Tim, and that's me. What is a reverse mortgage, and would that be a good idea for me? Now, you've heard all about the reverse mortgages, but you may not know what they are. You know, you got your Tom Sellecks and a lot of other celebrities are on TVs talking about reverse mortgages. They're getting quite a lot of buzz, but reverse mortgages can be a really good thing or a really bad thing depending on your situation and your ability to understand all of the details and everything that is involved. So, hey, before I dive in, do me a favor. If you like what we do here on the channel, give us a thumbs up, click the little like button, click the subscribe. That way you never miss another video. And you know what we say, God forbid you miss one of these videos, because it is an entertainment value. So, all right, so let's dive in. Let's just talk a little bit about the basics. What is a reverse mortgage? Basically, a reverse mortgage is kind of the opposite of a traditional mortgage. A traditional mortgage is where you borrow money from a mortgage company or a bank or a lender, and you use that money as the mortgage to purchase real estate. And over the years, you make payments on that loan, and every time you make a payment, your balance goes down a little. Well, the reverse mortgage is kind of the reverse. You have a home that you own. You either own it outright or you have a lot of equity in it, and we'll talk about the equity requirements in just a minute. And you've got that equity in your home, and you would like to tap into that equity for income or to help you pay bills or whatever. It's one of the things about home equity. It's great, but it's locked in your home. So if you can come up with a way to tap into that equity to pull out money, basically you're borrowing money kind of from yourself. But what you're doing with a reverse mortgage is a lender is giving you a loan based on the equity amount in your home. Now, most companies will require you have at least 50% equity in your home, meaning that if you've got a $300,000 home, you have at least $150,000 in equity, and you will be able to tap part of that as a line of credit or a lump sum, and we'll talk about that in just a minute. So basically with the reverse mortgage, you're borrowing money from yourself. You are bringing money, borrowing money using the equity on your home as collateral. And unlike with a traditional loan, when you're making payments, the balance goes down. With a reverse mortgage, you don't make payments, you receive money. And every time you receive money, there is interest, there are fees that are added to the balance. Okay, does that make sense? It's not like you're borrowing money to purchase a home. You are tapping into the equity of your home and borrowing money with the equity as collateral. So let's talk about who can get or who will qualify for one of these reverse mortgages. There are a lot of rules. It is governed because honestly, there can be a lot of fraud and scam in this industry. You must be at least 62 years old. You must have a home that is either paid off or you have at least 50% equity. Okay. Really, the credit requirements and the ability to make payments that would be in play in a traditional loan do not come in play here. They really are not concerned about your credit because basically they're using your home as collateral to lend you money. All right, so those are the basic rules. There's also, I believe, the homes must be no older than June of '76. So if your home is earlier or older than that, you're not going to get a reverse mortgage. But if it is newer than that, then you should qualify. And of course, there are all the standard hoops that you will have to jump through. There'll be an appraisal on the home. They'll need to determine if you are the legal owner and how much your equity is, that sort of thing. But once they do that and they approve you, well, there are different ways that you can use these reverse mortgages. First of all is you can get a lump sum. This is where you get all the money that you're going to borrow. Let's say you've got a $300,000 home. It is paid for, and let's say you want to borrow $150,000. All right, if you do, you can get that in a lump sum all at once. All right, and now we'll talk about how that's paid back in just a minute, but you don't have to make payments on that money. That money is given to you. You can put it in your account. You can live on it. You can do whatever you want. You could do equal monthly payments, which are kind of a form of an annuity. Let's say you are going to tap into your home for $200,000 and you want to draw out $5,000 a month as income to help you pay your bills. So in this case, the lender will send you that much money every month. Now, as your balance grows, so does the interest rate and the fees. So you're always going to have those involved. And one thing I forgot to mention is you must keep the house in good standing. Property taxes paid, insured, that sort of thing, and you must keep the home in good condition. So you can get it as a lump sum, you can get equal monthly payments, and then you can do what's called term payments. Let's say you want a 10-year term on this loan. And so if you do a term, the lender will send you payments based on that term of loan. Okay, so again, it's kind of the same as getting an annuity, but if you only want to do it for a set amount of time, you can do it as term payments. And then you can do it as a line of credit. Now, the way a line of credit works is you take that money and you don't draw it all out at once. You simply tap into it as you need it. It's kind of like a HELOC, a home equity line of credit, or a standard line of credit that you can get from a bank. So just remember, every time you draw on that money, there are going to be fees and there's going to be interest and that sort of thing. And then there's an option where you can just draw out equal amounts every month on the line of credit, not as you need it. It can just be set up to regularly happen. You might get a deposit once a month for $5,000. Okay, so the difference there is being you have access to the line of credit and you tap into it or withdraw money only when you need it, or you set it up as a line of credit and you arrange for them to send you a sum every month. And then you could also set it up where you are doing term payments with the option to expand a line of credit. Let's say you've got it set up on term payments, but you decide you need more. They can get you approved for a line of credit, and then you just tap into that as you need it. So let's talk a little bit about who is a reverse mortgage right for, because it's not right for everyone. If you are older, and you need income or you need supplemental income and you have a home that is paid for or you have a lot of equity in it, a reverse mortgage could be a good idea for you. Again, one of the key advantages of this form of mortgage loan is you are tapping into equity in your home. I've seen situations where someone had a paid-for home. Let's say they had $300,000 in equity, and then they fell on some hard times, and because of their credit, they couldn't get another loan, and they couldn't get the equity out of their home. They have a $300,000 asset, but they can't tap into it. If that is you, then looking at a reverse mortgage may be the best way to go. Again, the thing to remember about reverse mortgages, they're just like every other mortgage. You're going to have interest and you're going to have fees. It's not free money by any stretch. But again, if you are in a situation where you are equity rich and cash poor, certainly could be a good option for you. Let's talk about how this gets paid back, because you do not make payments on a reverse mortgage. The way it is paid back is when you sell the home or pass away. The reverse mortgage comes due, meaning that the lender is going to step in. They're going to say, we have a reverse mortgage on this home. This is how much we are owed. And so the home will be liquidated and the lender paid. And then if there's anything left over, of course, the heirs are going to get in line for that. So rather than having to make regular payments, again, the home is either sold or the heirs pay off the reverse mortgage to satisfy it. But the bottom line is you don't have to make regular payments to this. Keep in mind, interest is accruing. Fees are accruing. You must keep the property taxes paid, insurance paid, home in good condition, but you do not have to make a payment until you sell the home or you pass, and then the lender is going to be paid in full on what's owed. So what happens if your home suddenly starts to go down in value and the reverse mortgage is actually more than you could sell the house for? Well, there's mortgage insurance in place on that. The government got involved and wrote some rules. So you cannot pay back more than the home is worth. Okay? So it's not like, let's say you've got $200,000 outstanding on your reverse mortgage and the home is only worth $150,000. They're not going to come after you or your heirs for that additional money. They are going to be taken care of by the insurance. So that is one good thing. In this area, home values are doing this. There's really no chance of them going down. So the bottom line is this. Everyone is different. You need to look at your situation and determine, is a reverse mortgage a good way for you to tap into the equity in your home to help you pay bills and stay afloat in your older years. And I can tell you, as someone who is getting older every day, those financial worries can really work on some folks. So a word of warning here, though, if you are have any questions whatsoever about this, you need to get someone who cares about you involved in the process. Okay? Mortgages are very complicated. As I mentioned at the top of the video, there are companies that will try to take advantage of older folks. If you, and I would not want that to happen to you. So you need to have someone, a family member, an attorney, someone you trust, look over the terms of these reverse mortgages and make sure they are for you, okay? Because remember, they're not great for everybody. They're good for folks in a certain situation. And I honestly think it's a good option. I'm glad that it is available to folks. But again, just like anything that involves putting your home on the line, make sure you do your homework and you get all the information you can. All right, guys, that's it. I hope that was helpful. It certainly wasn't a deep dive on the reverse mortgages. You need to go online, do a lot more research if this is something you're thinking about doing. But in the meantime, if we can help you in any way when it comes to real estate, we've got Leading Edge Real Estate Group here and 300 some odd agents now, and we are all over North Alabama, Southern T. More than happy to help you out. Southern Tennessee, not Southern T. We're more than happy to help you out. My contact info is below. All right. Hey, if you got any questions or comments, love to hear the feedback. In the meantime, we'll see you on the next video.